Today, we are going to be breaking down some of the key terms and concepts that you need to know to get started in the world of Forex. Don't even think about trading until you are comfortable with these terms. For every new field you embark upon in life, you would encounter new terminologies and terms which is peculiar to such field. You have to get accustomed to its terms, be it law, medicine, journalism, engineering. So also is the field of Forex. For you to be able to learn and trade, you should get to know some of the terms that is used in Forex trading, okay? You may be among the gathering of Forex traders, but you won't understand a dime of what they are saying. This is because you don't know the terms, right? Now, understanding these terms is essential for anyone, for you who wants to enter the world of Forex trading, because without a basic understanding of these terms, it may be difficult to understand and properly communicate with the market and also with your fellow traders. So guys, let's get right into the video. Welcome back to Rity Trade Hub Forex Beginners course. In today's video, I am not going to dwell so much on this topic Forex terms, because this is just an introductory video, okay? So I'll be explaining these terms in details in my subsequent videos. So guys, I'm not going to dwell so much in today's video because this is just an introductory of Forex terms, okay? It's just for you to familiarize yourself with these terms, just in case you come across them in any of my videos. But not to worry, in my subsequent videos, I am going to give a detailed explanation of each and every one of these terms, right? So let's get started. Let's start with the basics. Forex. Okay, Forex, also known as foreign exchange, is the buying and selling of currencies. It is the largest and most liquid financial market in the world, with a daily trading volume of over $6 trillion. Guys, I've been ringing this like a bell since I started my videos, okay? So this market is open 24 hours a day, 5 days a week, and allows traders to make profits by predicting how one currency will perform against another, okay? The next is exchange rates. The exchange rate is the value of one currency compared to another currency. The exchange rate is the rate or price at which one currency can be exchanged for another currency in Forex trading. So basically, it is the price at which the base currency can be bought or sold against the quote currency. Don't be confused about base and quote currency. Like I said, I will explain all of these terms in detail, so make sure you're following this beginner series closely, all right? So, and this is constantly changing. The exchange rate is constantly changing as the market moves. So when trading the forex market, it's also important to understand the factors that influence exchange rates, such as the economic and political news, as well as market sentiment, right? So the next on the list is a broker. Guys, a broker is a financial service company that offers you leverage to be able to participate in the forex market, okay? A broker offers you the ability to trade currencies, commodities, and other instruments on the foreign exchange market. So guys, there are various brokers in the forex market, okay? We have Forex for You, we have XNES, we have OctaFX, we have Hot Forex. In fact, there are so many of them, all right? So if you want to know the broker that I recommend for my students, you can check out the link in the description box, all right? So the next term is the term buy. This is self-explanatory, all right? This term refers to purchasing a currency pair in expectation that the price will rise, and the next is sell. This term refers to selling a currency pair in expectation that the price will fall, all right? So the next we have is a currency pair. Currency pairs are individual currencies that are paired up, okay? A currency pair is the two currencies that are being traded against each other. They are usually the main instruments traded in the forex market, and the knowledge of the currency pair will also guide you in executing your orders. So if you want to find out how this works, there is a video somewhere on the screen here on currency pair, all right? I'll also provide a link in the description box below. And then the next is the base currency. The base currency is the first currency in any currency pair. It is the currency that you are buying or selling. For example, if you buy the Euro USD, pair. Okay, then you're buying the euro because the euro is the base currency. Remember I said euro USD, I mentioned euro before the USD, so basically it is the first currency pair. So what it implies is that you are buying the base currency. And the next is the quote currency. Okay, the quote currency is the second currency in any currency pair. The quote currency is the currency that you are using, right, to buy or sell the base currency in the forex market. So in, let's say, the euro USD pair, for example, the US dollar is the quote currency. Okay, and the next term is long. This term is another word for buy. Okay, to go long basically means to buy. So if a trader tells you that he or she went long on a currency pair, that trader meant that he or she bought the pair. Okay, same applies to long position. Long position, just like the term long, all right, long position refers to a trade that is initiated by buying the currency pair with the expectation that the value of the base currency will rise. Basically, a long position is when you buy a currency pair with the expectation that it will appreciate in value. Okay, it seems like I've mentioned that before. All right, so let's proceed. All right, so the next term is to go short. All right, short, this term is another word for sell, and to go short means to sell. So if a trader tells you that he went short on a currency pair, he meant that he sold the pair. And same applies to short position, just like the name short position. All right, short position refers to a trade that is initiated by selling a currency pair with the expectation that the value of the base currency will fall. Okay, the short position is when you sell a currency pair with the expectation that it will depreciate in value. All right, so the next is pips. Pips, acronym for point in percentage, is the smallest unit of price movement in the forex market. This is the unit of measurement for the change in value between two currencies. So basically, pips represent the change in the quote and value of a position in the market you may have taken, and a single pip equals to the smallest change in the fourth decimal place, and that is usually equal to 0.0001 for most currency pairs. And notable exceptions are pairs that include the Japanese yen, where a pip equals 0.01. Okay guys, pip is the bedrock of everything we are going to be doing in forex. Okay, currencies are gauged in pips, trade orders are placed in pips, movements in the exchange rate is measured by pips, profits are calculated in pips. Guys, practically everything we are doing in forex involves pips. Okay, so I'm going to drop here a detailed video on pips to enable you to better understand this term. All right, so I will also leave a link in the description box below, so make sure that you watch that video. Is very essential. So guys, the next on the list is lot size. Okay, lot size in forex trading refers to the amount of money invested or traded in a single transaction. Lot size is the amount or quantity of a trade that you bought or sold. It's sometimes called your position size or trade size, usually expressed in units of the base currency, and a lot size can range from 1,000 units of the base currency to as high as 100,000 units. Okay, all right guys, another important term to know is leverage. Leverage is the use of borrowed capital to increase the size of a trade. Okay, in forex trading, leverage allows traders to control large positions, make larger profits with a small account or small amounts of capital, right? For example, a leverage of 1:50 means that for every $1 you invest, you can control $50 in the market. However, it's important to note that leverage can also increase potential losses, right? So guys, there is a detailed video here on leverage too. All right, you can check the description box for the link to the video. Make sure you watch that video, it's very important. Okay, when trading forex, you often hear the terms bid and ask. All right, bid price is the price that buyers are willing to buy. Okay, and then the ask price is the price that sellers are willing to sell. Okay, And then we also have the spread. All right, spread is the difference between the bid and ask price. The spread is the difference between the buy price and the sell price of an instrument. Brokers wrap their cost in the spread that is offered to you. So the wider the spread, the higher the cost of trading. All right, trading cost will be lower when the spread is low or lower, whichever one. All right, so guys, that's for that. And then the next on the list is margin. Guys, margin is the amount of money required to open a leveraged position. It is the difference between the full value of the position and the amount of leverage used. Okay, the next is trend. All right, this term refers to the overall direction of a particular market at a given time. It implies that the markets have a direction. It's either moving upward or downward. So you can hear people say a market is trending upward or the market is trending downward. All right, now the next on the list is the bullish market. Bullish market is a market that is in an upward trend. So when someone tells you that a currency or a commodity is bullish, it's telling you that the market is going up. Next is bearish market. Guys, familiarize yourself with this term so that you don't need to get lost in any of my videos. Okay, so the next is the bearish market. Bearish market is a market that is going downwards or a market that is in a downward trend. So when someone tells you that a currency pair or commodity is bearish, it's telling you that it is going down. Okay, once again, take note of these terms because you would be needing them as we progress in this course. Okay, now the next terminology that we will be looking at is the bulls. The bulls are referred to as the buyers, or the buyers are referred to as the bulls. Okay, so this term refers to buyers in the forex markets. And the next is bears. Bears, the sellers are referred to as the bears. All right, the term basically refers to sellers in the forex market. So when you hear me say the bears are doing this, you know that those who are willing to sell the market, the sellers, are the people I am referring to. Okay, now the next is ranging. Okay, a market is said to be ranging if it does not have any particular direction. Right, it's neither moving upward nor downwards. Okay, now this refers to a market whose trend is kind of sideways. All right, so you may hear people tell you that the market is just ranging. So they are indirectly telling you that the market has not found any direction yet. So the next on the list, guys, NFP. NFP, guys, NFP. Guys, we will talk about this on a very good day. But for now, NFP is an acronym for non-farm payroll. Okay, it is a very important news event in the US. So whenever you hear NFP, you just know that this is a news event. Okay, take profit. So the next is take profit. Okay, it is a form of market order that tells you, broker, to close your trade for you and lock in your profit when your trade moves a certain number of pips in your desired direction. All right, the next is the stop loss. Okay, stop loss is also a form of market order in the forex market. Here you are giving your broker an instruction to close your trade when the market wants to go against you. Okay, the stop loss is a trade management technique that is used to limit potential losses in a currency trade. Okay, so the next on the list is technical analysis and fundamental analysis. These are two methods used to predict the movement of currency pairs. Technical analysis use charts and past market data to identify patterns, while fundamental analysis looks at economic and political factors that may affect the value of a currency. Okay, so guys, I will be stopping here for today. Okay, these are just a few of the terms and concepts that you need to know to get started in forex trading. This video is just to expose you and get you acquainted with some key forex terms so that when you see fellow traders discussing, you would get along easily. Now that we've covered some of the basic points, it's important to know that there is much more to learn before you start trading. Okay, I have a detailed video on all the concepts or terminologies outlined in this video. Videos on pips, leverage, currency pair, market orders, and others which you need to watch to help you better understand these terms outlined in this video. Be sure to check it out and subscribe to my channel for more informative videos on forex trading. Okay, I hope this video has helped you understand some key forex terms. If you have any question, you can drop them in the comment section below as I will reply you. All right, thank you for watching. If you are enjoying the content and want to stay updated on all my future videos, then make sure to hit that subscribe button and turn on post notifications so you will be notified every time I post a new video. Keep learning, and I'll see you in my next video.